Good evening, everybody. Welcome to the April 15th edition of the Locke in Your Success Market and Trade Update. Interesting week we had last week. Yeah, I don't know if many of you realize this, but it's the first down week we've had in the NASDAQ since late December of last year. This has just been an incredible run for the NASDAQ. I don't think it can be a surprise to anybody it broke trend line. This was a very aggressive up move. If you take a look at the daily charts, like I said, we broke our trend. Last time it broke trend was back here, right? Didn't slow us down a lot though. It just kept running going. More or less bounced the 20-day moving average. We're probably going to be fishing for the 50-day moving average, or let's take a look at the weekly for a second. Looks like the next real support level here in the NASDAQ is 2650. Can it turn before then? It certainly can, but that also comes in with its 50-day moving average. I wouldn't be surprised if it goes fishing for this moving average and tries to pull down or at least run sideways until the moving average comes up there. Let's just take a look at the SPX for a minute. We dropped out of our aggressive trend channel we've had here for the last, all year. We just broke down into a support area, which is, there's nothing bearish about that. Just an indication that we're maybe pushing into a sideways trend. So if the NASDAQ comes down to its 50-day moving average, the SPX will likely come down towards the bottom of the support level and then either run sideways or bounce. I would anticipate we go into a sideways range unless something drastic changes in the next couple of weeks. So, slightly bearish to sideways short term and sideways for the longer term now. Dow, this is a little different here. We've already hit the bottom of the support level here. If the SPX and the NASDAQ come down, this is going to break, probably come down to 12.5. And for our old friend the Russell here, I think we're just going to go into an extended sideways range. So it's possible we come down here, test the 775 level. That will likely hold somewhere in this area. And we just see how we had this nice wide sideways range back here. We're probably going to go into that for a little while longer. That's what I'd anticipate anyway. So that's what we have for the markets. As far as our trades go, I am still in this April M3 trade. And if you were following us last week, we made several adjustments. We had, let's see, where the Russell come down to. They come down all the way to 784. And that was all the way down here. At the time, it was forced us to kind of do a couple condors and widen out the 790 butterfly for safety. And then we had a hard bounce. And, normally that kind of price move is not going to bother this trade, but we're only what? We are 4 days from expiration now. We were under 10 days to expiration last week. And when you start getting close to expiration, you become sensitive to price movement. Our profit target here is $1,000. I did pop off $1,000 a couple of times last week because of the adjustments I was forced to make to control my delta. And the fact the market's swinging around this close to expiration, I'd be a lot better off had I been a little bit looser with our adjustments. However, the trade's doing fine, and really, if the market acts up too much, I'll just get out. But as of right now, I think the trade's pretty well under control. I have a nice wide range. If we get a move under 10 points tomorrow, we should still be able to maintain our profit target, maybe quite a bit over. Again, this T+0 line is probably a little wacky because it's after hours. And if we go 2 days with only a 10-point range, either direction here, we pretty much have it made. It's a guaranteed winner, and if it behaves for the next 2 days, I very well may expire this. We'll see how it goes. I still have not entered M3 trade for May. I'll do this when this, like I said, is closed out. And one thing I forgot to mention on Friday, I actually, let me reset this date. On Friday, I actually bought back one of these verticals because we had that hard bounce. I ended up purchasing a 790 800 vertical and an 800 810 vertical to deal with the upside because we were all the way back up here to let's see, 810. So we were all the way back up here. I was definitely feeling some pressure on the upside. And as I said, I've been kind of bullish, and I was looking at this support area, thinking, hey, we're going to bounce to here, and I have to be real careful of this area because if it decides to blast up here like it did last time, see if we had the reversal here, and it just blasted right through, came back to highs again. If it came back to new highs at 840, I was going to have a problem if I didn't keep up with it. So I decided to jump the gun a little bit, do the adjustments. Of course, we backed off, and this is where we sit now. Like I said, I did back out of one of these yesterday at a $200 loss on that adjustment, and this is what we look like now. That's just the way it is. It's the name of the game. Next to expiration, it's just the way it is, so nothing to worry about there. Okay, let's take a look at our May bearish butterfly. Alright, so here's our May bearish butterfly. This has been a lot easier to manage because it's a lot further from expiration, and the price movements haven't been that bad. So if you remember right, we started here at 800 because the volatility was so low and the market was skewed so much to the upside. We were forced into doing this roll here, and then the market continued up. We hit our add point and ended up adding at the money at 840, and then the market backed off. It hit our downside adjustment point to pull off the upper butterfly, and we've been sitting here ever since. I think, oh gosh, we did this a while back, and everything looks fine. We have another adjustment point where we roll this thing back at 780 or thereabouts. We have not hit that yet. Let's see, we've been down to 783 for a low, and that was still within limits. And again, even at 783, this thing's not in terrible shape. I'm not waiting for 780 to roll this back. Matter of fact, I prefer not to roll it back. I'm hoping we stay over that level and don't close over that level so that I can keep it here. But if it does, we'll follow the guidelines and we'll go ahead and we'll do that. So this thing is still looking perfectly fine. Unless it's up about 460. The other one looks fine as well. If as long as the market somewhat behaves, we should be doing good there. And I'm definitely going to be out of the M3 this week because it expires, and we'll be looking at going into May. And possibly, it's 56 days, the end of the week, we may be going into the June bearish butterfly. Alright, that's it for now. Everybody have a great week trading, and I'll keep you updated with any changes. Thank you and good night.